More buyers are continuing to wait on the sidelines. Hey everybody, Scott Walters, welcome to the channel. If you're new, I want to thank you for coming. If you're returning, I want to thank you for your continued support. As a California licensed real estate agent in a euphoric Southern California market, I've been living in the Wild West. It has been complete buyer herd mentality, drink the real estate punch at its highest levels. I decided to come to YouTube and start warning people, please be careful in these times. We are in an artificially created market through government stimulus and stimulus programs. So let's get right into this red hot topic. As a realtor in one of the hottest markets right here in California, where it has been some of the most significant real estate growth in a short amount of time out of any U.S. market, I have been absolutely shocked and alarmed of what I've just witnessed in the world of real estate. You see, when I got into real estate, it was very, very much traditional. Those traditions have now changed enormously. You see, back in the past, we would do open houses and take customers and drive them around. And now what we're doing is virtual tours, writing offers on properties sight unseen. Oh, but let's not stop there. Let's also waive contingencies and inspections and do a full roll of the dice and buy a house that hasn't even had a basic inspection. So we don't even know the health of the property. Very, very, very shaky practices when it comes to buying real estate. But we're not going to stop there. We're going to keep going. Now, while we're at it, we're going to go ahead and do a market analysis and see what this property's worth based on recent sales data. But we're not going to pay that price. What? No, we're not going to pay under that price. We're going to pay over that price. And not only over that price, significantly over that price. Why? Because everybody else is doing it. So we should probably do it too, right? I hear the interest rates are really low right now. And that's exactly what's caused this. So when I was in the middle of this real estate shift where these buyers were just pouring in. Now, again, as a realtor, what I do, and many realtors, at least the top realtors do, is they pay for what's called lead generation services. We pay for shopping buyers in our area to call us. And so as a person who operates a lead service program and fields many leads that are directed to me because I pay for that, is I get to really get just a great thumb on my pulse of what's going on out there and temperature checks sheerly by the call volume that I get. So one of the things that I saw is typically with any lead program that you're paying for is you maybe every day or two would get a nibble, maybe a call, somebody showing interest. They're not necessarily saying, hey, I want to write an offer on this property, but they're saying, hey, I would like more information on a specific property. That was typically what we would see every couple of days. And it would take maybe 10% of all the calls that you took maybe got to the point of writing an offer. And maybe 10% of those people that wrote offers maybe actually bought a house. You see, so it was a very small percentage of people that you talk to that actually end up buying a house. But again, as a realtor, you're willing to do that because your job is to sell houses and help people. So what I saw all of a sudden in the midst of this pandemic was this go from one call maybe every 2 days or so to probably, no exaggeration, up to 10 times a day. It just completely spiked to the point where that's all I was doing. I went from working internet leads or lead generation leads to maybe a very small portion of my week, an occasional part of my week, to almost being dominated by, that was it. I couldn't even keep up with this. And so now what I'm seeing is I slowly saw it go from 10 calls a day. When I started sounding the alarm, telling people, listen, this is not the best market to race out and overpay in, and I definitely don't want to see a new home buyer spend their life savings or borrow money to get into a down payment and then be house poor and have no savings as backup, no cash reserves, and one blip in the economy or their income would send them into a tailspin. Didn't want to do that, right? Some of us realtors do have a conscience. So what I ended up seeing was it go from 10 calls a day to 5 calls a day to 2 calls a day, which is still insane. Like I said, maybe in a normal market, you would get, through lead generation that you pay for, you maybe get a call every 2 days, once a week maybe, to dying down to about 2 a day. And so now what I'm seeing is it's basically dropped off the edge of the map and went back to pre-pandemic call volume, maybe even less. I actually think it's actually less than what I was seeing in a normal market. So this is what we're currently dealing with now, is all the leftover buyers that had pre-qualification letters that are still in the market, that are still working with an agent, and an agent still bringing them properties and saying, hey, something new came. And so these are people that had already flipped the switch and they're mentally back in the euphoria. They were going to buy but got beat. And so they're still out there buying. But any of these new calls, any new buyers, the people that are, you can guarantee any of the big real estate websites that field most of this captured shoppers, I've seen a massive reduction. Well, I know they have, because they send them to me, and I've basically seen this massive drop to the point of what it was pre-pandemic now call volume, and probably worse. So what I currently, the temperature check that I'm getting is actually what we're seeing right now. Active buyers that are in the market are just people that have been shopping since the height of the euphoria in the pandemic, that have been beat, that are just still out there writing offers on properties. Many of you, many of them as well, they're still cool with going out and buying a property, but they're not willing to waive inspections and contingencies and appraisals and write at high levels over asking price to do it. They're willing to pay asking, maybe slightly over asking, but they still want to have a home inspection done. They don't want to remove all their contingencies. They want the opportunity to be able to make sure the house is of reasonably sound health, or they want the option of backing out. Smart. That's the way it should be. So the real estate game is this change shows significantly. And again, that's one of the reasons that I came to YouTube and started sounding the alarm, is because we've normalized things that just aren't normal. These are not normal. Now they might continue to, I might be the guy that has to go ahead and change. Well, we will. The real estate's going to change. The way we do business absolutely will change. There's always going to be a need for a salesman, but I wouldn't be surprised if slowly the real estate agent's role is reduced. So we'll see. You see, in real estate, only the top agents are really getting rich. Most agents are out there just making a living. And so one of the tough parts about being an agent is, in a downed market, you need to, you may not be able to weather that storm, because if sales dried up, like we saw in 2008, many agents had to drop out of the industry and go, look for a regular job because they had to survive. So, most agents don't make it past their first year in real estate. Agents that just came in during this euphoria might have a little wake-up call to do, because while they came in at a time where they actually made money their first year, most agents don't, and there's a chance that when the market shifts, that they're going to, unless they invested their money or held on to their money or insulated themselves, they might not be able to last a down market. For me, I'm super grateful. That's why I can come on here and sacrifice a lot of sales and even risk some business, is because I invested a lot of money in real estate. And again, 95% of all millionaires made their money in real estate. It wasn't by owning their home, it was by owning other people's homes. I would say I'd be more concerned about owning other people's homes than your own. It's not important to own your own house. It's just important to own. I'll live in a shoebox temporarily to stack up some income properties. It only takes a couple, and you can now have a lot of free time and not have to work for someone else. You can work for yourself. That's the American dream. But that's the thing we need to do, why we need to stay close to the channel, because of the pandemic and the climate of politics playing a role now in our lives at the levels they're playing it in. That American dream and the division of wealth, where the middle class continues to shrink, We need to really even be smarter than we were before. Times have changed since our parents were buying their houses. Times have changed a lot. So, again, we're going to get through this. We're going to continue to just do our best to navigate through any changes. But the main thing is right now is we need to let the dust settle from the pandemic in the form of these fiscal cliffs of eviction bans need to end, forbearance program needs to end, foreclosure bans need to end, and unemployment benefits need to end. And they all will end. It's a matter of them continuing to kick the can down the road. These were only supposed to last a couple of months when the pandemic hit, and it's been almost 2 years now, that a good year and a half, that we're still playing this thing, and it's just now the snowball is getting bigger. This runaway train is going faster, so it's becoming trickier to stop it. And so we really need to watch that. That's what we really need to do. Let's wait and watch. If you just bought, don't worry, you're not in trouble. You're not in trouble if you bought at the height. You're in trouble if you sell at the bottom. And so as long as you're insulated, don't go out spending all your money yet. Insulate yourself the best you know how. Save your money for a rainy day. I always say it's nice to have at least a year's worth of cash reserves to pay your bills in the event of an emergency, whether it's you get sick or the economy fails or whatever the case may be. This is going to allow you to sleep much better at night, knowing you can pay your bills if and when something happens. Because it's not if, it's when. Listen, life's going to be challenged. There's going to be ups and downs. But if you're ready for it, you're going to do great. Failing the plan is planning to fail. You have to have a plan, and the best plan you can have is insulate yourself with some cash reserves to get you through any hard times that may or may not come. Because it's better that you're ready for something and it doesn't happen than not be ready and have it happen, right? So I hope that helped a little bit. Go out and make a count today, and we will see you on the next video.